Hey everyone, Couch Investor back to our video for today. So let's talk about Amazon. I think Amazon still has a long way to go. Of course, I'm biased because it is my second largest position in my portfolio behind Tesla. Now, despite all the run-up we've had this year, it's up 67% year to date. We can clearly see that as for price to earnings, EV to EBITDA, price to sales in the next 12 months, all of them are below the 10-year mean. The only one that is over that is obviously the one with free cash flow, but we've talked about free cash flow, operating cash flow for Amazon becoming much better at a very fast pace in the last 2 quarters. And I expect that to continue. So I do expect this graph right here to normalize a little bit and go back under that 10-year mean. Now, of course, Amazon, because of how the business has been operating in the last couple of years, free cash flow has been negative, as you can clearly see right here. Free cash flow per share have been negative for the last 2 years. Well, if you look at the fiscal years, but before that, you can see the strength of their business. The underlying business has always been extremely strong. It's just them wanting to grow much faster, invest in a lot of areas. And now I do believe that we are going to see another green candle when it comes to free cash flow per share. Now, if we look at the growth rates, EPS estimates 5-year growth rate here sits at 37.4%. We've seen Alphabet at 17% and we've seen Apple at 10%. Of course, Alphabet and Apple, you see another graph when it comes to shares outstanding. They are able to buy back more and more shares because of that free cash flow generation throughout the years. I believe Amazon will enter that stage sooner rather than later. Now, the topic I want to talk about in this video is their next AWS moment, and that's about logistics. So let's first have a quick recap. So late August, they talked here about the announcement of app integration for merchants to enable Buy with Prime on Shopify stores. Buy with Prime was something that they announced last year. It has been a great success. So let's see how successful it is for those that are integrating that option. So Buy with Prime helps merchants grow their e-commerce business on their own website and has been shown to increase shopper conversion by 25% on average. If you look at more examples here, after trying a number of ways to increase shopper conversion and build genuine relationships with our shoppers, we can confidently say that offering Buy with Prime on our website has been the most impactful. We're excited to continue to grow as Buy with Prime merchants, and the new native integration is going to make the day-to-day management of Buy with Prime easier for our Shopify store. Moving on to the next one. Amazon's Buy with Prime is helping merchants increase sales and gain new customers. So here we have even more information. So initial results show that on average, 3 out of every 4 Buy with Prime orders are from new shoppers. So merchants like electrolyte drink company Hydrolyte are well beyond that, with 9 out of every 10 Buy with Prime orders coming from customers new to their brand. And so we continue here with another feature, Buy with Prime Cart. So this new feature also increases the size of sales for businesses. Merchants who used it first experienced a 15% increase in Buy with Prime units per order after adding cart to Buy with Prime checkout. And so these impressive results are in addition to the 25% increase in shopper conversion on average. This is very impressive, and it just shows the power of the Amazon ecosystem. I've said it in the past, the Amazon ecosystem is crucial. We're not just talking about the parts that are growing faster, advertising, subscription, AWS, but the other part that is obviously more capital intensive is extremely crucial to the whole success of that company. And so this leads me to this big announcement. So introducing Supply Chain by Amazon, an automated solution to help sellers quickly and reliably ship products around the world. And this is basically them taking the fulfillment by Amazon to the next level, like they did with AWS in the early days. The early days, they were losing money, didn't make a lot of sense. Why is a book selling shop suddenly going into the cloud? Well, it has been a pretty good success story. So since the early days, Fulfillment by Amazon has become a very valuable service for our selling partners, offering a fast and reliable fulfillment service that is on average 70% less expensive than other fulfillment services. As a result, Amazon is now delivering the largest selection of products to US Prime members at the fastest speeds ever. And so with Supply Chain by Amazon, Amazon will pick up inventory from manufacturing facilities around the world, ship it across borders, handle custom clearance and ground transportation, store inventory in bulk, manage replenishments across Amazon and other sales channels, and deliver directly to customers, all without sellers having to worry about managing their supply chain. This is huge. This is, again, the next step of the fulfillment by Amazon. Amazon really went from just sending books online to suddenly basically handling your supply chain. And this, of course, was very well received by some analysts. So slowly but surely, Amazon is replicating the AWS playbook by broadening the availability of its fulfillment network. This comes from an analyst at Wedbush. And by the way, Amazon's fulfillment infrastructure now spans more than 541 million square feet. More from the analyst here, Amazon is well positioned to broaden the availability of its services to multi-channel sellers and non-Amazon merchants. Very important, non-Amazon merchants. And so, yes, we are going to get to a point where they will basically offer you logistics as a service. Now, another quote here from Bank of America analyst: "We believe Amazon has developed core competencies in logistics with scale efficiencies that can capitalize on through a logistics as a service business." Today's announcement follows numerous press releases in the past 30 days, suggesting the company is ramping its logistics as a service offering, the next potential service model for Amazon following third-party retail, cloud, and advertising. And so while we've had a huge run-up since late last year, beginning of this year, yes, right now we are at a crucial point. I would say this was a previous resistance back in August 2022, around $140 to $145 or so. Right now, we are a bit stuck there as well. Currently, RSI looks to be very, very close to being overbought, so keep an eye out on that. But over the long term, I do believe that Amazon is still one of the best businesses to buy around the world. Despite it being expensive looking at traditional metrics, as we've seen, I believe the growth rates there, the underlying business, the profitability of the business will just become much better over time. And of course, keep an eye out on the FTC lawsuits, but in my opinion, they'll just add another L to their track record. I believe their case is extremely weak. But hey, do share your thoughts down in the comments below. Have you been buying more shares of Amazon? Is it actually in your portfolio? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.